Michael Bamber here, how to backtest a Forex trading strategy, as well as 3 tips on how to optimize your backtesting session.
The platform that I'm using to backtest and what I use for all of my trading is something called TradingView. The very first thing to bear in mind when you're backtesting is to focus on the higher time frame structure before you drop to the 1 hour. So let's go into the daily chart first and foremost. So a tool that I like to use is called the vertical line tool. So I go on the vertical line right here and I'll put that on, focus on the most recent 2 years of data. The reason I say this is because the market evolves over time, human psychology evolves over time, therefore patterns evolve slightly. So as I said before, I've got a little vertical line to implement onto the charts here. This is going to give us a great guideline, obviously when we drop to the lower time frames of what data we're testing. So I'll be back in a couple of minutes. I'm just going to draw in the high time frame structure and I'll join you in a couple of minutes. So now that I've drawn in the higher time frame structure, it's important to realize what you're looking at when you drop to the lower time frames. So in this situation, what am I seeing this as? So I'm seeing this bigger structure as this is the impulse. This is the correction. So this section right here is the correction. So impulse, correction, and then looking for potentially another impulse to complete to at least here, if not breakthrough. So that's what I'm looking at when I go to the higher time frames, to the lower time frame, sorry. Let's drop to the 1 hour chart and have a look at the trades. I haven't seen any price action. So what I'm going to do is just use the replay mode on TradingView and just rewind price a little bit. And I can't see any data. So I'm just going to rewind price to, let's say the 19th of December, just before the start of the year, just so I know what I'm looking at. So I haven't seen any prior data apart from what I saw on the daily chart previously. So looking at selling opportunities to the downside because this is just a bigger correction on the higher time frames. So give me a couple of seconds. I'm just going to play this data out. And if I do look for any setups, I'll join you right back here. So I've just played a bit of price action and I am looking at a possible setup around this area. So I'm just going to talk you through that now. Looking for selling opportunities because of the high time frame structure. The 2 areas that I'm looking at is this double top area around here. And then if price does break and nothing's really changed, I'm looking at this structure here for selling opportunities. So any area around there, looking for selling opportunities to the downside. So this brings me on nicely to tip number 2, which is to forecast whilst you backtest. So what I mean by that is, if you just bear with me, let's do this in real time. All you're basically doing is is to plan ahead of trades before they happen. So it's almost like predicting the price action before it's happened, but in a smart way, and it gets your subconscious mind adjusted to what you're going to expect or something similar to what you're going to expect in the live markets. The reason this is important is because if that setup materializes, and obviously we know this through backtesting and stuff, it just releases 0 hesitation, or it's going to reduce hesitation a lot more. So very, very important that you do that. It's just a little tip that I thought I'd drop in there. So looking at anything like this, any sort of setup around these areas at the 1, 2, 3, top of the structure, anything along these lines here, I'll be looking for a trade. And then I'm going to grab a risk to reward tool that's available on TradingView. If you just go into the one into down six tools and you have the long position or the short position. Now looking for a short in this situation, so I'm just going to put the risk to reward tool on and just scope out potential opportunities. So we can see we've got 4% to there. Overall target of just under 20%. So if we do get that bigger drop, which we are expecting on this pair, yeah, looking for that trade at the top or on the break if we do get a smaller ascending formation. If this does break out of the high, then I'll be looking for something, any sort of ascending formation like this at the top of the structure here. Anything like that. So very handy. By the way, FYI, this tool that I've just used here, it's called Bars Pattern, helps you duplicate the price action in the past. So if you go onto the 7th option down, there's something called Bars Pattern, and you can just basically duplicate price action, and it helps you identify what you're expecting in the future and just gives you a good forecast. So that's super helpful. So let's play this out. So join you back here in a couple of minutes when I played out price action. So we can see right now we have this ascending formation at the top of the structure. So we've got this double top area. We've actually broken slightly. and potentially a false breakout. So looking for any selling opportunities around this area. So what I'm going to do is just, if this was live market, I'd be placing an entry order just below here. Could potentially filter that on the 15-minute, but for these purposes, just going to use a 1 hour, 35 pip stop, targeting the low for about a 2.5% profit, and then overall target that we forecasted before. This is actually around about 13. Yeah, so triggered into the trade right now. So once I get triggered into the trade, here's the important part, is to take a screenshot just to make sure that when you're looking back on these trades, you know exactly why you took the trade, which obviously accelerates the progression and the improvement. So join me back here in a couple of seconds when I just write a quick annotation. Just going to play this out in the live markets. So impulsed away from the entry, so I'm going to move to break even at this point. So I'm just going to use a horizontal ray on the tools option. I'm going to put this in there around about break even area, and I'm just going to adjust it slightly just for my stop loss. Very simple to set a template up like that. And yeah, just manage. The most important thing is you manage it exactly the same as you would in live markets. So just be honest with yourself on how you managed it. Don't try and cheat in any way. I'm sure we've all done that in the past, but it's just important to be honest with yourself, and that's where the most growth is going to happen. So bear that in mind. So you're now joining me back. I've just been taken out of the trade for 13.2% profit, which is very nice. Don't get caught up in the fact that every trade is going to be a win. It's definitely not. But if you have an edge in the market, it will play out over time, over the course of a sequence of trades. So that's super important to understand. So I've been taken out of this trade now for 13.2. What I'm now going to do is take another screenshot, and just so that I can see exactly how I manage this. So just going to add a little bit of information to this. Tip number 1 is to forecast while you backtest to stay 10 steps ahead of the market. Now you see, before I took that trade, I knew exactly what I was looking for. We just replay that. Back in these areas, if you wind back to the start of the video, I knew exactly that I was looking for a sell setup either here or here. So with that in mind, when that setup formed, there was no real hesitation, and I just set the entry order and took the trade because I planned for it in advance. So that's super important. If you're not planning for trades in advance and then that trade just happens, sometimes, not all the time, but you may miss trades and you may be more hesitant because of the nature of not preparing for the trades. So super important to understand. The second tip is to focus primarily on the most recent data over the past 2 years. Now, we know the market evolves over time, human psychology evolves slightly over time, and human behavior. 2 years will be the most recent price action you can work with. Test your strategy out, see the strike rate, see the wins, the break evens, the losses, and just get a good idea of what your edge is in the market and just really see how it plays out. So very important to understand. And the last tip is to not to be too zoomed in on the 1 hour. As you can see, before I dropped to the 1 hour chart, I already knew what the high time frame structure was. If I was to start the chart here, if I was to start the chart super zoomed in on the 1 hour, you see how you could just draw in any structure and you just get caught up in average trades all the time, which is exactly what I used to do. So I learned from my mistakes, backed out to the high time frames to start off with before jumping to the 1 hour and the lower time frames. So very important to understand.
And remember, in Forex, we're talking about money. We came in this game for money. We came in this game to earn a living. So we are not here to play games.